Hello and thank you for joining us today. My name is Wesley Boudreaux, one of the Chevron focused advisors here at the Retirement Group. We're going to give you a quick interest rate update. We just got out last week the January interest rate, so we'll see how that takes us through April for those of you looking to commence your benefits and take the pension plan as a lump sum. A quick reminder though, again, we have worked extensively with Chevron for quite some time, but we're not employed by them nor endorsed by them. However, should you have any questions specific to the Chevron plans, we'll be happy to help you out with that. We've been working with Chevron for quite a while. The retirement group's been around for about 30 years, working with corporate employees and helping them transition into retirement. And for a big chunk of that, we've been working with Chevron. So our advisors have a deep understanding of whether it be your pension plan, your 401k, your healthcare, retiree medical, life insurance, things of that nature. So should you have any questions on there, just reach out to us. We'll be happy to help you out with that and also review a plan if you need to. We do have offices throughout the country, so rest assured if you need to sit down with somebody face to face, we can probably still accommodate that. But obviously, this day and age, it's pretty easy to have web meetings, phone calls, email, whatever your preferred communication method is. Just let us know. And ultimately, at the end of the day, if you haven't done one in a while or haven't done one ever, take us up on our complimentary cash flow analysis. This is actually a detailed financial plan specific to the Chevron benefits, to show you are you on the right path to retire when you want to, whether that be 2 years out, 5 years out. Do you want to look at retiring sooner? When we run the numbers, do we uncover the fact you need to work longer? Should you cut your spending? We go through all those different options and also help you determine the best way to look at your 401k and your pension, whether you take the pension as an annuity or a lump sum, which is what these interest rates will correlate to here in just a moment. So any questions on there, just give us a call. We can kind of go through that. What everybody's kind of concerned about is the interest rates and how those are affecting their lump sum. So a quick reminder, we got this seesaw pattern here on the top. What happens is as interest rates go up, which we saw them go up dramatically in 2022, we saw lump sums come down. Now let's go back. We saw during the pandemic, the government lowered interest rates a little bit too far because we were trying to fuel the economy. So we saw some lump sums go up quite a bit to the highest levels we ever saw. Now the flip side happened in 2022. We started to see inflation hit in, which we expected, but not as severe as what this was and as quick as what it was. So we saw all those lump sums come down dramatically last year. And the interest rates at this point kind of leveled off or hit their peak, if you would, in October, and have been coming down a little bit month by month. We'll see if this trend continues. But if it does, what it means is for those of you that are looking to retire in the near future, we're actually seeing interest rates come down, so those lump sums starting to go back up. But by no means will we see them probably the interest rates go down to where they were during pandemic levels and bring those lump sums back up that high. But they are going to be potentially going higher as we move forward here and we start to level off. So how are these lump sums calculated? What happens is, again, you've got that Chevron pension plan, which is a classic defined benefit plan, in which case there's a formula looking at your years of service, final average pay, and multipliers and Social Security offset to determine what your monthly income annuity is going to be. Let's say it's $3,000 a month for the rest of your life. From there you can choose, do I want a joint survivor to cover my spouse and myself, or do I want to take that and get a lump sum? So what Chevron does, they go out and look at, okay, well, if this person's getting $3,000 a month for the rest of their life, let's say they're 60 years old, life expectancy is 86, so they got 26 more years of payment. Now let's look at the interest rates and do a net present value calculation to determine how much do we have to give you, and maybe it comes out to 600, 700,000, whatever it may be. That's where they get that lump sum. So if those interest rates are lower, they have to give you more money for you to go out there and try and recreate that paycheck. If the interest rates are higher, which has happened over the last year, they don't have to give you as much. So that's where the background of the rising and falling interest rates are affecting that lump sum. So what Chevron does, they go back and look at the third, fourth, and fifth month to get an average and update those on a monthly basis, which is unique. A lot of other companies do it on a quarterly or annual basis, so you've got more specific numbers to look at on a rolling monthly basis. So right now, since we got January out, that gives us the rates all the way through April. So if we look at this, the numbers in white, that's going to be the actual PPA segment rates for November, December, and January. And like I said before, they peaked out in October. And if you look at November, December, and January, let's look at the second segment. You can see those are coming down from 5.6% to 5.15 to 4.98%. The reason the second segment is what I'm referencing is because that has the highest weight usually with most retirees. These different segments are the first, second, and third. The first correlates to the first 5 years retirement. Second's going to be for years 6 through 20. and the third is going to be years 21 beyond. So for most of us, again, that second segment covers 15 years, so it covers the bulk of our retirement. Somebody who's younger is going to have more weighting on that third segment as well. So everybody's going to be different and unique when you run your calculations. But take a look at the second segment for a good idea. And if we look at this right now, if you were actually commencing your benefits, that means you've retired already and commenced your benefits in March. You're looking at interest rates of 5.01%, 5.53%, and 5.31%. But even if you just retired, we're going to tell you, if you're thinking about taking the lump sum, wait one more month or maybe longer, because if we go to next month in April, those rates come down to 4.89%, 5.24%, and 5.03%. So that's about a quarter point drop from the middle segment. So that's going to correlate to roughly about a 2.5% change or bump in your lump sum maybe. So if you had $1 million lump sum right now in March, it could go up to $1,025,000 or $1,025,000 in April. If these interest rates continue on a downward trend, then it could go even higher. So unlike last year where we were looking at people retiring and kind of jumping ship as quick as they can before the interest rates moved up, we're on a different time point where if these interest rates keep coming down, it's going to be more beneficial to stay on. That doesn't mean you have to stay on work. You could potentially have just retired, but maybe not commence your benefits until we see these rates level off because you want to take the lump sum. But again, if you're not taking the lump sum, you're taking the annuity, these interest rates have no effect on you whatsoever. This is just going to be on the lump sum. So should you have any questions on this, just give us a call. We'll be happy to kind of run through and review this with you. The best way to do so is by running a cash flow analysis, which again, I mentioned before, takes a look at what you're trying to, your goals are. We can run through different retirement scenarios, run through different pension elections, whether you take the annuity or the lump sum. We'll look at the combination approach, whether you want to look at taking a lump sum and maybe doing your own annuity. Go through all those different options with you and what the best fit's going to be. But just give us a call and we can run through that or update if it's been over a year and let you know exactly where you stand and what those different options are. So I know this was quick and brief, but just really just an interest rate update. But should you have any detailed questions, reach us at 800-900-5867 if you'd like to schedule an appointment with myself or one of the other Chevron advisors. You can also reach that info@theretirementgroup.com. We've got a couple QR codes up here, so if you'd like to schedule an appointment with myself or somebody else, you can use that, get into our calendars. However, those are usually going to be about a week out, so if you need something sooner, give us a call. And then there's also one for our LinkedIn page. Go ahead and follow along with us specifically on the Chevron LinkedIn page so we can keep you updated on webinars, company plan changes, things of that nature, interest rate changes as well. So all the material you need on planning is going to be there. So I want to thank everybody for joining us there again, and keep in mind, even though we've worked extensively with Chevron, we're not employed by them nor endorsed by them, but should you have any questions, want to run that cash flow analysis or dig into anything deeper, just give us a call, 1-800-900-5867. Thank you very much. We hope you have a great day.